And I know Nancy told me to try and keep this to 30 minutes. And I know it's hard to sit in front of anything if you're at home watching or in the office for an hour, even if it's a video or movie or action film. Nonetheless, some bald kid sitting up here talking about auction markets. But we'll try to make this entertaining. We'll try to make it informative. If you're here in the audience, feel free to raise a hand, even if I'm talking 100 miles an hour. Get my attention, and we'll talk and address your question as you have it, because I'd hate for you to forget it. If you're out in the audience, connected to the meeting, feel free to do the same, and hopefully one of the folks here can flag me down and ask your question as well. If not, we'll try to address that towards the end of the meeting. But really happy to be here. Appreciate Joe, Nancy, and Jim inviting me out here. And also appreciate Pfizer Animal Health's help in helping with my thesis project. The data from the project actually came from them. They have a dedicated statistician that they've hired since 1994 to track the peak sales season, calf and feeder cattle sales, prices and lot descriptions, down to every minute detail you could possibly imagine. I actually came to graduate school from Certified Angus Beef. I got my undergraduate at Kansas State in 2005. Worked for Certified Angus Beef for 5 years, where I got introduced to some of the good folks at Pfizer Animal Health, knew about the data set, and when I went back to school to figure out a thesis project, Dr. Gerald Stucca, Dr. John Seeger, some of you folks might know, were courteous enough to give a young graduate student a chance to dig into the data set, and you guys and the producers of the industry will hopefully be the beneficiaries. But one of the things I've learned since I've now come to CattleFax and been there almost a year is that folks really like to ask a guy from CattleFax what the markets are doing. And so just real quickly, I want to give you guys 3 good takeaways of what the markets are doing before we move into this. And I think some of these things are obvious, but it never hurts to understand the reasons why. One of the first ones is prices are high, and they're going to get higher. And that offers a lot of opportunities for cattlemen, but it also offers a lot of challenges. If any of you heard Randy Block speaking this week at the meetings at TCFA, prices are swinging higher, and if you're caught on the wrong side of one of those swings up or down, as dramatic and volatile as they are, it doesn't mean that you're not going to be profitable for just a month if you get caught on the wrong side. It might wipe you completely out of this business. So understanding what's going on in the markets and why it's happening is really important, whether you're talking about fed cattle, feeder cattle, calves, or hay and corn prices. And so that's going to be a reality of our business at least for the next year, probably the next couple years going forward, as we try to ration out tighter cattle supplies, tighter hay supplies, and all those things that really have a big impact on our business, whether you're feeding the end product to a consumer or you're raising it at home on the ranch. I think the other thing that's become really apparent to us, especially this year, is that the U.S. and global economies are still sluggish. 2 months ago, if you'd asked a lot of folks, they'd have said the U.S. was in worse shape than probably a lot of other countries around the world. And I think in the last couple of weeks, just the opposite could be said. We've had some pretty encouraging news in terms of U.S. productivity, consumer income, employment, and now we're dealing with this mess in Greece. But regardless, beef is being shaped by global markets. China alone, I like to say anything times 1 billion people is a really big number. So if we can just get a Big Mac in every person's hands in China once a month, just think of where this industry could be today. And it's going to continue to be that way. Japan's news has been shaping the market for the last couple weeks, even more so in the last couple of days as we've had more official Japanese news about the influence of what this age requirement and raising that could potentially mean to beef producers. And then lastly, it goes back to my first point. Producers are exposed to great opportunities with these higher prices, but they're exposed to a lot of risks. And so understanding what Brett and Jason and Tommy had to say earlier, understanding hopefully some of these things I'm going to share with you today and how they can influence a producer's bottom line can mean a really big deal to a producer down the road in improving the longevity of his operation. But my thesis project, basically what I had the opportunity to do was dig into a database of the last 10 years of SLA video auction results from their peak sales season, pretty much from May through September. And why I wanted to do this is because we have an opportunity in that data set with the cattle that sell there to understand the national price incentives for what's going on with calf management traits. There's been a lot of studies. These studies aren't new. The study I've done isn't anything novel or incredibly scientific in its approach. These studies have existed since the 1960s, but they were typically about calves that sold in one auction market in one area of the country for a couple months, or if they were a really big study, they might have covered 3 of the bigger stock yards, like Oklahoma City, Joplin, and others, over just a short period of time. This study is covering a representative sample of national buyers, national sellers, across multiple calendar years. And so it gives us an opportunity to understand the evolution of calf management, the evolution of those price incentives for specific management, and it gives us a way to quantify them and understand how vertical coordination in our industry, basically what the consumer and end users telling us to do as cow-calf producers, can influence their profitability. And so what is the research? One of the first things we need to do is review existing research, see what's out there, see what's been done. A lot of work's been done on effective frame size, weight variation, buyer and seller reputation, I should say. And very little has been done, though, on a lot of the value-added traits, the things that you guys as representatives live in on a day-to-day basis. And so trying to quantify, maybe less so of some of the lot characteristics, while those were all quantified in the models that I did, we're going to focus a lot of our discussion today on the genetic, the management, and those marketing traits that existed at the time that those lots sold and how that influenced the price those producers received. And then at the end, hopefully I'll take some time to apply that to some of the trends that we're seeing that have evolved in the industry and influence ranches today. First things first, you always have to have a few caveats. Economists love to say, well, on the other hand. And so I think on the other hand, it's important to recognize that the things and the quantities and the prices I'm going to talk about today might not exist at one of your customers' local auction markets. We're talking about a national sample here. The local auction market 10 miles down the road might have a natural feedlot right next door to the auction market. And so they're willing to pay a high premium for natural cattle, where maybe that's not necessarily the case on a national representative sample. Or maybe that particular yard that's close to that local plant or that local sale barn really has a strong Angus-based breed program that they need to fill a lot of cattle for, and there's just not very many Angus-type cattle in that area. And so there's a higher premium than would be witnessed anywhere. This is a national sample, so there's going to be local differences and regional differences, but to the large part we tried to capture those here. Also important to recognize that these are load lots of cattle. As you look at this research, if I'm talking about a premium for a health program or agent source, and some producers trying to apply it to his herd of 10 cattle, the premium's probably not going to be there because they're getting so discounted for having a smaller lot size. There's other things that are unique to the video auction market where a producer that's selling cattle avoids unknown marketing risk. The local sale barn might have 3 special calf sales in the fall. And, if a snowstorm runs through like it did in Denver, where I came from in the last couple days, and his buyers don't show up at that sale that was scheduled on Tuesday of this week, then he just missed out on a marketing opportunity to get a premium price for his calves because the buyers just didn't show. In addition to that, the truck had to slide across icy roads. He got in a wreck, had to unload the cattle, load them back up. They got stressed because they were run in and off the trailer 4 times in mud and slush. That doesn't happen as much in a video auction market atmosphere. And I think lastly, a point that I can't stress enough is these premiums change over time. And I'll illustrate that in the data I'm going to share with you. But it's important to recognize that, for instance, the agent source premium was mentioned up here by the folks earlier. With what happens with Japan is going to have a huge effect on what that premium looks like going forward. And right now, we just don't know enough details to understand exactly how that's going to be shaped going forward. And so the parameters. Every research project has to have some parameters, and these are the ones we set on ours. One that's not listed here, but in talking to Paul earlier, I realized is incredibly important. We only analyzed lots that sold because we needed a price for each lot to be able to quantify the characteristics and the value associated with them. So if a lot was a no sale, we actually wouldn't have any way to quantify the value of that program. But we looked at those calves that sold during the peak sale season. We only looked at calves. We had the feeder cattle data available to us, but for multiple reasons we felt the calf data was going to get us closer to a cow-calf target audience that we wanted to attract with this research, being in Kansas, a lot of cow-calf producers and stocker producers, but we wanted to focus on the cow-calf guy. And so we focused on those May to September sales, and we also wanted to focus on a fairly tight delivery window. And so most of those calves were still delivered within the calendar year that they sold in. We felt that as the calves were delivered farther from the sale date, that the pricing mechanism there might get a little bit more diluted. The other thing we did was we wanted to make sure phenotypically we had a very similar representative sample of calves. So we narrowed it down to a 300-pound window for steers and heifers. Knowing that steers typically are a heavier animal biologically than a heifer, that range was shifted up 50 pounds heavier to kind of fit the bell curve of what calves were sold in Superior during those times. And then we also broke out the models two different ways. We used a multi-year model that covered three different time periods, 01 to 04, 05 to 07, and 08 to 10. And the reason we did that was because that fit the lot characteristics that were very similar across those years. Essentially, 01 to 04, one of the biggest differences was we didn't have in the database a characteristic for age and source verification. The years after that, we did. In 08 to 2010, we didn't have data on NHTC eligibility. We also wouldn't have had data on a couple other characteristics, I believe, until that time period. And so we tried to isolate periods of years that had some similar characteristics to them. And then lastly, we looked at each year individually. And the reason we wanted to do this was because we wanted to capture variability in premiums and discounts. We wanted to be able to see that if there was a natural premium in 2005, did it exist in 2006, 7 through 10, or did it disappear on and off? And we wanted to have that variability introduced in those models so that we could talk to a producer about the dependability of counting on those premiums or discounts on a regular basis. Here's what the data looked like after we got done finishing with all those sorting. We were basically talking about 4 million head of cattle. We were talking about cattle that sold typically in July, were delivered mostly in October. About 30% of the calves were weaned. 77% of them were in some kind of certified vaccination program, and about a third of them were predominantly Angus or black-hided. And we did make a distinction between those two in the data set, and I'll share later. One comment I should have made earlier on the last slide, all my discussion today is going to focus just on steer calves for simplicity's sake. We will talk about annual models as well as the multi-year model that features the last 3 years, but I'll make those delineations as we talk through them. Vaccination and weaning. One of the things that you start to notice as you talk about these value-added practices is they're very bundled in nature. I want you to kind of have your radar up anytime you hear somebody talking about the premiums that are out there for preconditioning and whether they exist or don't, or things such as natural market eligibility. Practices like vaccination and these certified vaccination programs capture three price effects that require being separated. There's the value of the vaccination program itself and all the health requirements that come with that program. That's one. That's the obvious one. Then there's the certification component, very important to the process. And lastly, there's the weaning component. Preconditioning is a generic term. Preconditioning can mean any one of those three areas, or it can mean all of them, or just two. And so it's really important as we look at these programs that we isolate those effects, and we try to do that in this research. And so what this slide shows is just the price differences for the vaccination requirements and the certification. And so what you have in the top 5 listings there is the certified programs. And you see the range from low to high over the 10 years we evaluated the study. On the right, it's whether that premium was statistically significant or not. And so pretty much the right-hand column would signify the variability in that premium, whether it existed or not. The range is listed there as well. And what I will tell you is the low on that range typically was one of the first few years in the study. And Paul made an interesting point. When Pfizer started collecting some of this research and doing their own evaluations, they typically only saw dollar per hundredweight premiums and very small differences in those programs because at that time, people simply would no-sale those calves. They wouldn't get any bids that met the producer's expectations. as this market's evolved over the last 10 years, those cattle are selling regardless of health program, but you're seeing a bigger difference in how those programs are rewarded. And so what you see here, and I want to point this out, as we look at the top tier of certified health programs, there's a non-certified health claim where they might have just said in the description, but they didn't have it certified, you received 1 round of respiratory vaccinations at this time, or they received 2 rounds, 1 at this time or 1 at that time, but it wasn't a part of the VAC program requirements for one reason or another. And so we isolated those out, and what you'll notice is a program like a VAC 24 or VAC 34 only receives 1 round of vaccinations. And so you look at its non-certified cousin down below, and what you'll notice is it brought about $1 per hundredweight less. For something like a VAC 34 plus or a VAC 45 or a VAC precondition, you look at its cousin below with multiple respiratory vaccinations, 2 or more, and the difference is anywhere from $1 to $2 a hundredweight. And this is just on the health program requirements, and that's showing that difference in the price premium for certification. So now let's introduce weaning into the equation. Separate from health, this is additive. So if you're trying to figure out a VAC 45 premium or a VAC pre-con premium, you would add this dollar amount to the one I showed earlier, and I'll show that in another slide. But what you see here is we wanted to evaluate weaning and how it differed in value if these calves were home raised, never left the ranch, all the calves were related to each other, all raised in the same paddock, compared to those calves that were coming from multiple ranches, multiple origins, but still weaned. And what you see is what you would expect. Weaning is worth more to a buyer when the health risks of those put-together cattle are weaned and that risk is alleviated. And so I think it's really interesting as well that you see another point that this was significant almost every single year. And in almost every single year, the value of weaning was equal to or more than the value of the health program alone. So to give you a visual of how this would all fit together, and I'll put a caveat in here for simplicity. I understand that the VAC precondition program, those calves are going to be mixed origin weaned. But what you have here is you have those non-weaning related programs at the farthest to the left. The requirements step up as you move to the right with the addition of weaning. And you can see that a VAC 45 calf is bringing about $7.50 a hundredweight. And this is using the 08 to 2010 data, so we get a good representative sample. As you move down the chain and look at the value difference as you go down to like a VAC 34 plus, you've automatically lost about $3. And so there's some interesting things that you can look at here and help a producer decide what's the value to you and your operation to wean those calves. How much is that going to cost you from a time commitment? And back out those costs so those producers can make some informed decisions about the management practices on their own ranch. One other thing we did to just drive home that point of what is the value of certification is we did a fancy statistical thing called an F-test. And you don't need to worry about an F-test and what it means. We were essentially trying to decide is statistically, does a certified program actually have a value difference from its non-certified cousin? In the instance of a VAC 24 program, ironically, the statistical said that they weren't really that much different. That one guy saying he gave him 1 round of respiratory vaccinations and one guy that ran through a VAC 24 program was getting paid about the same. In some ways you can understand that because it's not a very complicated certified health program. But as we move down the system and we look at VAC 34 compared to 1 respiratory vaccination, VAC 34 plus compared to 2 rounds, you start seeing in every single category, every single range of years, there was a statistical difference that said the certified program was worth more than its non-certified cousin. Same thing applied for VAC 45, and I think that's an important take-home point that these buyers are very discriminating on details and having verifiable proof and documentation of what happened in these programs. Implants and verification. Implants is a lot like the health program. A natural program versus NHTC versus just a calf that's listed as not implanted. In a lot of ways, they're very similar, and in so many details, they're different. And that's what's seen here. These premiums for the top 2 categories, natural, market eligible, and NHTC, were tied to the implant strategy. And so what we looked at is we essentially had 5 groups of calves that we were comparing, and I just listed those 2 categories in particular. Those premiums are listed relative to a non-implanted calf, a calf that was listed in the description as non-implanted. We had those calves that were also non-implanted and natural eligible, non-implanted and NHTC, and all three. You just keep adding those premiums together. But then we also looked at what happened if they said in the description that those calves were implanted, and what happened if they said unknown implant strategy or multiple implant strategies within one lot. What happened with the ones I didn't mention? Well, the non-implant's the base. If they implanted those calves, no price difference to the non-implanted calves. I know growing up on our operation in western Kansas, Dad always was very conscientious of whether he was going to implant those calves that year or not, because he felt he'd get a compensatory gain discount because he'd taken some of that goodie out of them for the buyer. Based on superior data, the buyer doesn't care as long as they all receive the same implant strategy. What was interesting, though, is if they put unknown implants on the description or mixed implant strategy, they got a discount more often than not. So they're getting penalized for mismanaging those cattle. And something to keep in mind as you're working with producers, helping them get the best management money that they can. Make sure they're managing them right and you're listing them properly to protect your reputation as well as the producers. But as we talk about natural eligibility, some of you might be shocked that it's only a 78-cent premium and it only existed 1 out of every 6 years. I think the important thing here to realize is that's probably capturing a lot of variability. And that's not to say that in particular pockets of the country during particular times of year that there's not maybe a $2, $3 premium. But since we're analyzing this across regions, we're analyzing it across time frames that span multiple years in a lot of cases, it doesn't exist consistently enough to call it statistically significant. And I think that combine that information with the fact that implanting doesn't penalize a producer. If a producer is simply not implanting their cattle, there's an opportunity to implant them. If they want to market their cattle as natural, also suggests that they look at NHTC market eligibility and getting the paperwork done for that. 2 out of the last 3 years it's paid, and 2 out of those last 3 years it was $2 a hundredweight or more. And so I think that comes back to play also with NHTC eligibility. Once those cattle leave the ranch, that opportunity's gone. Natural eligibility, as far as I know, in a lot of these natural programs, if they do their homework before they buy these cattle and they see they're listed as non-implanted, that sometimes they can back verify those cattle and pull them into the program, probably pulling away some of the premiums eligible for that program. Agent source verification is one I used to get really excited about, and I hope I can still get excited about it, depending on this Japanese news. But what you'll see there is we started collecting the data in 2005, and it was anywhere from $1 to $2 a hundredweight over those 6 years. And what's interesting is it's steadily increased to this range between $1.60 to $2 almost there in 2008. But look at how many more agent source verified cattle are in the marketplace on the video auction markets today compared to none that were there in 2004 in our data set. I mean, today we're almost 50% of steers and we're still maintaining a $2 a hundredweight premium. One of the things that's encouraging is maybe this Japan thing goes away, but I think there'll still always be an incentive for more information and more verification. It'll be worth watching to see how this gets affected by trade down the road. But that's been a very consistent $2 that producers could count on for the better part of 5 years. Breed influence. The first 3 listed here are all non-black cattle. And so these are predominantly English cattle, so more than likely be Hereford crosses. I doubt there's too many Shorthorns coming through there, but they basically be non-blacks or cattle that in the lot had less than 90% of the lot that was black. So English, predominantly continental, English continental cross, and then the last 2 were reserved for black-hided cattle that made up 90% or more of the lot description. First one, black or black-white face, was 90% of the lot or more. Black or black white face based on what we could read in the lot description, see on the video. Then the next one we upped the ante one more and said, okay, what if the lot description said purebred Angus cows bred to registered Angus bulls? Confident again, more than 90% of that lot was a significant amount of Angus. And we wanted to see what the price difference was as we moved through those different breed categories. And again, the lesser dollar amounts on the low end of those ranges was early in the program's adoption. As we've gone in time, those premiums have become more robust. They become more variable across lot descriptions. And what you can see is we're up to the point where having a 90% black-hided animal can bring you $6.70 over, and this is a base of a Brahman-influenced animal, so some cattle with some ear. As we move into Angus, we get up to $7 a hundredweight. And so again, it brings to mind, well, does it really matter if it's listed as Angus or black and black whiteface? We did another one of those fancy F tests, and what you found is that indeed there was a statistically significant difference in those details. Now, I'm not here to promote Angus, even though I did work for certified Angus beef before graduate school, but I think it goes back to the point of some of the evolving market trends that we're seeing today with branded programs and grade. And it also goes back to that comment the buyers made earlier of, if they're black, what are they? If they're Angus, we know they're Angus. And so where do all these price differences come into effect? What's influencing these trends? I think the first one is we're seeing a bigger trend in our industry, and I think it's going to be renewed even more so based on the wide choice select spread we've seen lately, of a focus on quality. American producers can't compete with Argentina, Brazil, New Zealand, Australia on lean beef. But we can promote and we can beat them every day of the week on good, high-quality, grain-fed, well-marbled cattle. And because of that, you're seeing also another prevalence in branded programs. We have the beef trade demands that come into play, influencing how we verify these cattle at the cow-calf level so that documentation follows them throughout the supply chain. And then lastly, I want to talk just a little bit about a concept of feeder calf demand, because I think you're going to hear this a lot. Now, if you haven't already heard it this year, you will going forward as we face these higher prices. But just to review these real quick, trends in beef production. The green bars represent how much more choice product we've produced in the marketplace relative to select. And you can see that conveniently in 2008, when we hit a recession, we started producing choice product at levels nearly 2 times what we had some of the previous years. Restaurants quit buying high-quality beef when we started producing more of it, and it wrecked the spread, which is the red line. And it went from a high of $14 in 2006 down to last year it was right under $6. Now, I reviewed all this data on Monday after I'd already sent Nancy the slides, and we're actually probably going to see a premium choice over select closer to the $7 a hundredweight this year, probably $8 to $9 next year. We've been doubling over the choice select spread from the previous year every week here over the last 4 weeks. We've had some major retailers come into the marketplace and say it was time for them to differentiate product and upgrade their quality. That's caused packers to run like crazy to try and supply more choice product for their customers, causing even more demand for higher quality. While that trend's been somewhat new as of the last few months, this trend's been going on since 2002. This is the number of USDA certified branded programs out there. Certified Angus beef is by far one of the largest. It's the red half of those bars, and it's grown at about 4% a year. Their competition is the green bars. It's grown at a rate of 20% a year. Today, consumers aren't just recognizing beef as prime, choice, or select. Even if they do, they probably don't understand what that all means. But they understand sterling silver when they see it. They understand Rancher's Renaissance when they see it. They understand certified Angus beef. Branded beef's becoming a bigger part of our business, and because of that, buyers need to know the details of these cattle, how they were managed, what their genetics were, where they came from, details that weren't necessary 5, even 10 years ago in the marketplace. Export requirements. The red line is the one that you should focus on. It's the one matched up with 11% in the right-hand margin. That's the percent of beef produced that goes overseas. And what you'll notice is that this year, at 11%, will be the first year since BSE that will market over 10% of our cattle overseas, or 10% of our total beef production. This is why the agent source premium has been so important to us. Things like NHTC have been more important to us. And I think you'll continue to see this number grow into next year. Right now, we're 38% above a year ago in beef exports. By the time we end this year, it'll probably be more like 26, 27% above a year ago. Our fourth quarter is typically a weaker export time for us. But you're going to continue to see international buyers and their interest in our beef business grow. Now, this is one that I want to bring up right now because I know I hear it at home from the guys around the coffee table when we get together on Sunday mornings after church. And you hear the comment that why would I want to vaccinate my calves and age and source verify them and buy the best bulls and do all this documentation when calf prices are this high? Because the guy down the road that doesn't do any of that's getting a high price too. It doesn't pay. And so I actually started looking into this, and we took the research. And why I looked into it is this graph here shows you how the prices have increased over the last 3 years. We have 1 million less feeder cattle and calves outside of feedlots this year. We're going to have another 1 million head less next year. Prices are going to keep moving higher. So I tweaked this research, and instead of expressing these premiums and discounts in dollars per hundredweight, I converted everything to a percent of total calf price. So every calf price was 100%, and then those premiums and discounts were listed as a percentage contribution to that calf's total value. We took those percentages and multiplied them times the average calf price for each sale year. And I looked at what those values spit out. If they were statistically significant, almost every time those percentages converted back to dollars equaled the dollars I found in the research I just shared with you. Now, what does that mean? What that means is these premiums and discounts in the marketplace increase and decrease with price. So what does that mean for you as you're giving producers recommendations? The price of vaccines, last I checked, isn't a floating price with calf prices. Calf prices can increase right now a lot faster than usually the prices Pfizer and everybody else are charging for their vaccinations. So that means the investment cost in those programs a lot of times hasn't changed, yet the total return is multiplying in magnitude. There's never been a better time for a producer to take a risk and try to invest in some of these programs than right now. And so I think that's an important take-home point that, in fact, when prices are higher, you're actually getting paid more and rewarded more for these programs than when prices are low. Last but not least, we'll leave you with this. I'm from Kansas, so this is going to be a Kansas example. Sale coming up. We have 2 lots of cattle, seemingly identical in every single aspect of their management. Nothing was done differently. 125 steers, 580 pounds, a medium frame and flesh, uneven weight variation, Kansas cattle. Look at the pictures, both pretty similar. Everything's pretty much the same about how these cattle were managed. Yet when you went to the lot description as a buyer, here's what you read. Lot 1's producer took the time and said these are natural eligible and NHTC eligible. I went through the paperwork, I got it all done. Lot 2 just said not implanted. Guy with Lot 1 got his health practices certified, said they were weaned at home. The other guy said, just a complete vaccination program, 2 rounds of shots, weaned at home. Guys buy the same bulls from the same buyer, typically buy the same cows and just split them up evenly. Yet one guy said predominantly Angus, purebred Angus cows, registered Angus bulls from Joe producer down the road. The other guy just said, black and black white faces. If you look at that premium difference, $5 a hundredweight. Doesn't seem like a whole lot. But then you start thinking about it's $30 a head. Remember, there's 125 steers here. $3,600 more went to the guy with Lot 1. That's 18 tons of hay that guy can buy this winter at $200 a ton that the guy with Lot 2 can't. That might be the difference between feeding those cows an extra month longer and or having some surplus sitting over at the end of the day. Details are awfully important. And it's important as we read about this research that we try to make sure that if it's some journalist just writing about simple averages of some of these programs at sales, that they're accounting for all the different details that are in these programs, whether it's vaccination programs and weaning, whether it's non-implanted or natural or NHTC. And it's important to realize that documentation of quality really matters with buyers today. Buyers are much more sensitive to seller claims than they've ever been before, and I think that puts a lot of responsibility on you folks as representatives to make sure that you're representing them accurately and that you're encouraging your producers to take those extra steps. If they're already going through a lot of the management steps, go through the little bit of extra documentation it might take to capture their full value and be a little bit more profitable going forward. And so with that, if you want more research on this, I went through a lot of this really fast. There's a great article, Drovers caught wind of my thesis, asked me to write about an article in the August issue. I put the link written out there. You can type it in your computer and get that, or just Google or use their search on their site. Lance Zimmerman and Superior Livestock Auction will give you a whole different category of research I've done. I've tweaked these models left and right over the last 1.5 to 2 years. The differences all remain relatively the same. There might be some minute differences in how we crunch some of the models. A gentleman by the name of Stephen Blank did a lot of work with Western Video Market. He had a little bit different angle on it. Different video, I understand, but a lot of the same principles apply and might give you a little bit of a different flavor of what's been going on in the marketplace. And then hopefully by the time NCBA Winter Meetings rolls around, we'll have a calculator out based on this research that'll help producers weigh different production systems, decisions based on these premiums and discounts that we found in the marketplace. And one last note. As I mentioned earlier, these prices that we're facing today, higher than they've ever been before, more volatile than they've ever been before. And producers are turning to a lot of you guys as a resource. I talked to our office. They gave me the green light. If any of you aren't a CattleFax member, would like to see what it's all about, we have weekly publication that we put out called The Update. Covers every aspect of the beef industry from the cow-calf guy to the beef wholesale level. We also have a monthly publication just for cow-calf producers and daily emails on closing market prices. Drop me an email at lance@cattlefax.com by November 15th. On the 16th, or whatever the next business day is, I'll get them all processed. We'll get you in for a 3-month trial membership. No strings attached. At the end of 3 months, if you don't have any interest in being a CattleFax member, no harm, no foul. But if you do, we'll give you an offer to become a member for a full year after that, probably even at a prorated or discounted rate. I think you'll enjoy some of the stuff we put out. We always enjoy listening to producers and their opinions as well. But with that, I'll take questions on the research.
Hey, Lance.
Yeah, Clay.
One statement for everybody in regards to CattleFax that I think is really important. On CattleFax's website, there's an area where you can go in and look at average cattle prices for 450 to 550, 650 pound animals over the last 15 years.
Yes.
By the week.
Mm-hmm.
And it's really interesting when we have producers that call and say, hey, look, I've got a truckload of black steers that'll weigh about 550. What do you think? Where are they going to be? Well, you can go to this particular site and see what they've tracked. From the first of this year, look at what they brought a year ago, 2 years ago, 3 years ago to the week on CattleFax's site. And it's been a very helpful tool in some of the producers that we represent in helping them get their mind around what their price needs to be when we get ready to sell their stock.
That's a great point. You know, one of the questions we got a lot this spring when calf prices were through the roof in March and April was guys calling us and asking us about forward contract opportunities. You guys live that every day with the video auction markets. Having those prices out there broke out by regions, states, gives you an opportunity to look at those cash prices, compare them to those future prices at those exact same times, and talk about basis in a way that they can understand. You guys understand how hard it is to talk about things like shrink and slide. Basis is right in that same context. If you can give them the numbers, show them the dates, it's so much easier to communicate those concepts and the opportunities that exist out there by forward contracting those calves using a mechanism like Superior Livestock. So, great point.